You are listening to the Critical Mass Radio Show, Orange County's business talk show, focused on exploring topics of interest to CEOs who are leading middle market companies. With your host, Richard Franzi.
Hello and welcome to Orange County's longest running business talk show. And yes, I am your host, Rick Franzi. And boy, do we have a good show planned for you today. Why do you ask? Because Jay Rogers is our guest. He's the president of Alpha Strategies Investment Consulting. Jay, welcome to the program.
Thank you so much for having me, and welcome everybody.
Yeah, let's get started with your background. Can you talk about your professional background prior to starting your business?
Yeah, I started my career early on with some of the big wirehouses. Actually did my initial training in the old World Trade Center building up on the 65th floor. And long time ago, but back on Wall Street, it was very interesting. Got all the training, which was great, and was with us. Started with a firm called Dean Witter Reynolds Incorporated back in the day, and they were acquired by Morgan Stanley, and worked there for a few years until I was recruited to go over to Wells Fargo in their private client group, and then after a few years, I was recruited to go to Bear Stearns. And they're no longer, but movement with the industry is somewhat normal, but kind of started my early career with kind of the big wirehouses, getting that behind me. Then I had worked with a family locally up in LA, and then I joined a money management firm called Diamond Portfolio Advisors, and we were a high quality large cap growth money management firm based up in Westwood.
So what was the inspiration or motivation for you to start this business then?
The motivation to start Alpha was two things. One was we, in 2008, we were being courted by several firms to acquire Diamond Portfolio Advisors, and we sold out to an aggregator. And towards the end of the year, that transaction was closing up. And during that same time frame, my wife had an opportunity to relocate with her company, and we moved from Los Angeles down to South Orange County, and it was kind of a great opportunity to start fresh. And so I saw kind of a need in the marketplace for independent advice that had, kind of deep thinking beyond just stocks and bonds and some basic stuff, and people that were had a good understanding of kind of the world of what they call alternative investments, which are, hedge funds, private equity, real estate, and some other things that are not traditionally liquid, easy assets, but have some certain complexity to them. And there wasn't a whole lot of understanding around some of those sectors. And so I kind of started my career as Alpha Strategies, working with a few families that I know that had a lot of interest outside of the traditional liquid markets in what we considered alternatives.
So let's talk a little bit more about that. Maybe you could, for the audience, help to put some more meat on the bones of what an alternative investment be. What's that investment class? Can you talk about that, Jay?
Yeah, I mean, we'll start with traditional investments. So traditional investments would be stocks, bonds, money markets, mutual funds, ways to access liquid type of investments. And alternatives are less liquid things that are alternatives. Real estate as an asset class. Even within real estate, there's probably 8 or 10 different subcategories within there, from commercial to retail to multifamily to hospitality and other things. And so an understanding of all those different things, and each one will have a different impact during different market cycles, and also geographically different demands to add in there. Hedge funds. Within the hedge fund space, there's probably another 6 or 8 different what I call flavors there. So you have the traditional long short, but you have market neutral and global macro and some other different things there within the hedge fund space. Then you have private equity, growth, value, buyout. There's a few different flavors within private equity. And then there's private credit. And then you have commodities and futures and other things that you can be within there. So alternatives is fairly broad, but it just basically means things that are not traditional liquid asset classes.
So what type of investor, can you kind of give me a psychographic for the type of person that these types of investments would be appropriate for?
Yeah, the segment of the I work in is called the ultra high net worth segment. Starting back when I left Bear Stearns, one of my former clients had sold a company, and I kind of went in house with them, and we started with just north of $100 million. Hey, let's look at diversifying our asset base and getting involved. And within that family office space, it's basically in-house a lot of different things: legal, accounting, investment advisory, all that happens within. But the difference is there's some IRS rulings with a family office where everything stays private, versus if you're working through a traditional registered investment advisor or brokerage firm, all that stuff is made public. So it's a way of kind of privatizing a whole investment scheme and forming a business around a family that has significant liquidity.
It would seem to me that that would be a difficult niche to penetrate. Is it?
It is and it is not. It's very niche. Obviously, there are not something you see every day. So, when you turn on the TV or drive through different places, you see tons of financial firms advertising and out there looking for clients. That's definitely not what I do. It's a word of mouth game. So there's no real advertising for the types of clients that I work for. It's really through the trusted advisor network. So a lot of times what will happen is an accounting firm or transactional attorney will be working with a client to sell their business. And the client will say, hey, what are my options? And they'll say, hey, you should meet Jay Rogers, who specializes in dealing with some of this, sophisticated nature of combining estate planning, how to exit your business, what's the correct structures to hold your entities in, and then setting up a whole investment strategy around there. And then it's looking into the future for future generations. And a lot of times it also involves a family foundation and some philanthropic activities as well. So it's really putting a complete infrastructure around a family, around a liquidity event that will obviously change their lives, but also the lives of future generations.
So, in a general sense, and I'm not looking for any investment advice, but are these types of clients more interested in accumulation, asset protection, or tax avoidance?
All three. Traditionally, I have worked with, and it's just kind of my personality and the network of people I'm with, is I tend to work with serial entrepreneurs, which are people that will build a successful business, exit that business, then they get bored rather quickly and, move on to a next one and start the next business, and also have board seats with other companies that they're invested into. And so they traditionally will not rest on their laurels, and we will structure their overall investment portfolio. We'll have some stuff that's a little bit more liquid, a little more conservative. And then we will also take some risks with, buying into other private companies and expanding into other areas. That's kind of complicated, as you have to look at, where we are in the economic cycle, where we are in the world. Obviously, with last week's events, the political changes taking place in the country right now are very dramatic. And so you have to kind of take a very broad, high level view of where things are going, and then work down to a macro level where you put things to pursue those different strategies.
So, is it hard when you're focused on a very specific niche, which kind of feels like it's at the top of the pyramid, to not entertain clients who don't fit that niche, Jay? Or have you learned the lessons to stay focused in your niche?
I stay focused in my niche. I get referrals to people all the time that are not really appropriate for what I do. But I have a network of friends and associates that are in this industry in a number of different areas. And so I can make referrals very easily to very qualified, good people to handle them for what they need.
It seems like, from a layman's point of view, from my perspective, Jay, that there are some investment choices that really are only available to people who have the type of portfolio that you work with, that are in the niche that you, family offices, etc. Is that true?
Seem to have a little bit of lag time here on our connection.
Okay. Were you able to hear my question or not?
No, I was not. I'm sorry.
Okay, that's all right. Technology here, ladies and gentlemen. Live
Yeah.
radio. I was just saying, looks like we lost Jay. Just as I complimented technology, it gave us that. Let's just wait a second, ladies and gentlemen, and see if Jay comes back to the show.
Okay, yeah,
Because here you go. You're back?
I'm back.
Okay. So I was just asking, and maybe it's why the internet went out on me, but in your experience, are there a class of investments that are only really appropriate and available to the people that have family offices, etc.?
No, not really.
Okay.
A family office is there's a lot of institutional investors, foundations, endowments, pension plans, other things. So family offices are kind of a in between. So you have the retail investment clients kind of at the, 50, 10, 15, 25, $50 million level. And then you have institutional investors, 50 million and up. And so family offices more fit in the investment allocations of more of an institutional investor, but they are private clients in that they require some attention and a lot of advice and working with them to structure things in ways that make sense for them.
Excellent. So let's shift our focus a bit, Jay, here on critical mass. I wonder if you could think about a piece of business advice that you might have received over the course of your career, and something that you could share with our audience.
It's not lesson I learned early on, and it wasn't even from business. It was from an earlier part of my life where I was in the Marine Corps, and it was the best advice I got was keep it simple, stupid. What they call the KISS principle, and it in every aspect of my life that has proven itself true.
So even though you're dealing with complex investment vehicles, alternative investments, your motto is KISS, huh?
Just keep it simple, because life gets complicated all on its own, and the simpler you can keep things, the better.
I think that's terribly appropriate in your profession as well, regardless of who your client portfolio is. Sometimes investment strategies can get a little complicated for people to understand, and it's an emotional subject, their money, isn't it?
It is. And it's, because I started my career on Wall Street and was there many years, I saw what do you call inner secrets, or the way things are done. And when I ventured out on my own, I wanted to really, what I feel is right for the clients is keeping it simple, because the more complex the investments are, that's how Wall Street makes its money. They love different layers of things, and they charge fees along every step of the way. And so for some of these complex investments, you're paying 2 or 3% of your bottom line. So you're starting your investment at 3%, say. Even if you make a 10% return, you're really only making 7%, and that doesn't include taxes. So once you calculate things out, sometimes the return is not all that great. So the simpler you can keep things, the more kind of a John Bogle approach, who's the founder of Vanguard Mutual Funds, which is just basically keep fees to a minimum, and the less drag you have on your overall portfolio, the better.
This has really nothing to do with what you do or what we were talking about, but as you were talking about how Wall Street maybe likes to add complexity so that it's murky and they can make more money, I think about the movie The Big Short and the mortgage-backed securities, and how that all got, really, people didn't even really understand what the investment vehicles were. But
Wall Street has a lot of very, very smart people. And when there's demand in the market, they will come up with a solution for it. But you can guarantee that solution is going to make them a lot of money.
Yeah. This is, hey, words to live by here on Critical Mass Business Talk Show from Jay Rogers. Tell me about the future. You've got your business up, you've got your client portfolio. Where do you see taking Alpha Strategies?
Unfortunately, the way Alpha Strategies is structured, it's not really meant to be a growth vehicle or that's going to be mass market. I tend to work with only a very, very small number of clients at any given time, just because the amount of time and attention I need to give them dictates that I can't do this for a lot of people. And my skill set, although it's probably replicable over time, I haven't found a lot of people that think the way I do, that treat clients the way I think they should be treated, that I can really replicate this over time. Now, I've got 3 boys that are growing, and in the future, I would love them to enter the business and take it over for the next generation. But for now, I don't see a lot of upside potential for really growing this business or taking it places. But I think overall, the future is pretty good in that the United States has been an incredible marketplace for people to be successful, especially here in California, with obviously in Silicon Valley with the .com era, and even here in Orange County with a lot of successful businesses that are constantly being grown and acquired and sold and that sort of thing. So there's a lot of wealth being created still to this day. And because our government structures and taxes and everything else is fairly complex, there's always going to be a need for people to give really bespoke advice to people and structuring around how do I pay my taxes that legally I have to pay, but how do I pay the least amount possible? And are there ways to structure this with coloring within the lines, but is there ways that we can structure this that way there I can pay it over time, maybe not all up front, and I can use tax deferred vehicles and other things that will preserve my wealth over time?
So as you were answering that question, it sparked really 2 thoughts, and I'm not sure if they're related or not, but I'll give them both to you, and we can either take them together or we can take them individually. It would seem to me that in addition to your years of expertise, you must constantly be needing to do additional research to stay current and to really understand the alternatives available to your clients. And then I'm wondering, what's your role with artificial intelligence? Because maybe it's helping you to do some of that work. I don't know. But if they're overlap, great. If they're not, take them separately, Jay.
I think it's all together. I think when you really look at what I do, there's a need for constant information. And it starts, like I said, at a very macro level, what's going on in the world right now, then what's going on here in the United States, what's going on with politics, what's going on with the economy, what's going on with, local things, what's going on with crime rates. Everything has an effect on something else. So it's that butterfly principle where, butterfly flaps his wings over halfway around the world and eventually it comes over to us. But there's a lot of everything kind of interacts and intersects with each other. So it's a combination of looking at all the factors that are out there, putting it all together and trying to make informed decisions to figure out where things are going. One of the quotes that I love to use goes back to sports, and the greatest hockey player of all time, Wayne Gretzky. When they asked him, how is he so good? He says, well, I skate to where the puck is going to be, not to where it's been. And I've always taken that to heart when it comes to investments, is taking all the information possible and use that to figure out, okay, where are we going? What's coming up next? Like I can see what's going on now. I know what happened in the past, but what's coming up next? And let's start to position ourselves for what we think is logically going to come next. And you don't get it right 100% of the time, but as long as you do it most of the time, you're going to be fairly successful and, everybody's going to do well.
Again, as you were answering that question, I was thinking the class of clients that you work with aren't just looking for investment opportunities, probably that are domestic in the US. They may also have a global perspective as well. Is that true?
Absolutely. Especially, post-COVID, a lot of people woke up to what supply chain really means. And a lot of people were scared when we started looking at, oh my God, the United States has been offshoring all of its pharmaceutical production. Oh my gosh, we've been, offshoring all of our computer chip production. we started realizing, wow, we got to bring this stuff back. And obviously, the last administration brought in the CHIPS Act to bring in some of that. The current administration is looking at using tariffs and other things to bring more back. But there's a couple critical industries. Obviously, pharmaceuticals, one that I mentioned, that is in still needs to onshore a lot of that stuff, because we don't want to be reliant on other countries for essentials that we need here. But that being said, like a previous family I worked for, we were doing a lot of work in the Amazon rainforest in Brazil. What were we doing that for? It was partially for business, but partially philanthropic, in that we realized that preserving parts of the Amazon rainforest were essential for the rest of the world because of the global warming and all the other effects of what's going on there, but that the Amazon rainforest is considered the lungs of the world because the amount of air and the carbon it consumes and fresh air that it creates, and then that gets blown by the currents and other things around the world. So we are in a world that has gotten smaller and smaller with technology. And you mentioned artificial intelligence before. It's kind of the story's not quite told yet, and I'm not sure where it's going. Obviously, it's headed there fast, but I'm not sure the full effect of what it's going to do. Obviously, with any business that requires number crunching or data, that sort of thing, it's obviously going to revolutionize those industries. But I still think some of the service industries and other things are going to be somewhat immune to that, because people still want that personal one-on-one touch. They want somebody to give them personal advice and explain things to them rather than just getting a result from a computer screen.
Interesting. If someone would like to connect with you directly, Jay, maybe on LinkedIn, or learn more about Alpha Strategies Investment, how do they do that?
Yeah, on LinkedIn, my handle there is AlphaJ, and I pretty get people almost every day requesting to link up with me, so I do that. Also, I have a website. It's asinvestmentgroup.com, and people can reach me through there either way. But I look forward to talking to people, and if I can ever provide guidance or advice, I'm certainly happy to do so.
Well, I've enjoyed the conversation. I said at the top of the show we were going to have a good show. You got a beautiful surroundings there. Southern California in November, you can be outside in a shirt. It's fantastic, and we're living the life, aren't we, Jay, here in South Carolina?
That we are. We are blessed.
Thank you for being a guest on the show today.
Thank you, Rick. Thank you, everybody, for attending.
And thank to the audience. You're a part of Orange County's longest running business talk show and podcast. If you're an Orange County entrepreneur, or maybe you lead a nonprofit and you would like to be a guest on our show, connect with me on LinkedIn. I'm Rick, R-I-C, Franzi, F-R-A-N-Z-I. If we're not already connected, send me a connection request. Mention that you would like to be a guest on the show. And between Haley, our producer, and myself, we can work with you to get you on a future episode of our program. We love exposing other Orange County entrepreneurs to other Orange County entrepreneurs, and have been doing it for 15 years here on the program. And until the next time we all have a chance to be together, I hope all of your business decisions will move your company in a positive direction.